You're listening to another episode of the Young Investors Podcast, so sit back and relax as myself, Brandon, and my buddy Hamish discuss the latest in the world of finance and stock market investing. Now, a quick reminder before we get into the podcast is that nothing in this podcast should be taken on as personal financial advice. If you're ever unsure about your finances or investing and you need some help, make sure you reach out to a qualified financial advisor. But with all that said, let's get into another episode of the Young Investors Podcast. All right, guys, welcome back for yet another episode. Joined as always by Hamish Hodder. Hamish, how are you? How's Melbourne going?
I'm doing well. Got to give my a weekly COVID update. A couple of pieces of news. One is we can now play golf, which is great because I do love going out.
It's the only thing you're watching. Can I play golf yet?
Yeah, so they first were going to get it on Sunday. Then they said, no, we're not ready yet. And then they said, actually, Tuesday you can have golf. But unfortunately, this week, the weather is awful. So I do actually have a booking today, but I think it's a 90% chance of rain. So it's about a 10% chance I get out there. So
yeah, no chance. No chance.
We'll see. How are you doing? How's Canberra going?
It's going well. Hopefully our lockdown gets eased in a couple of weeks. It's slowly starting to get eased. I don't know. We can like exercise like with 5 people or have a picnic or something for like 4 hours or something. So, you know, it's going all right.
Yeah. Can take the ankle
got
break.
My jab yesterday. Oh, sorry. What'd you say?
I was just going to say, you can take the ankle bracelet off for a couple of hours, right? And then,
Yeah. You only get zapped after 4 hours instead of 2.
That's right. That's right. Yeah.
And they've turned down the intensity by 50%. So it's very kind of them.
Yeah. The army truck only rolls past the street once a day. Not twice anymore. I think I don't know. I mean, the restrictions are harsh, but I think some people outside Australia literally see Australia like that at the moment, like that. Where
it does seem that way.
I mean, I've seen some pretty funny like reports from like American news outlets, just kind of so confused as for what we're doing. And I mean, the restrictions are harsh. So I mean, I don't really blame them, but it
makes sense.
Funny.
It was kind of funny. I saw the report on like CNBC where it was like New Zealand locks down entire country after one COVID case. It's kind of funny. Whereas in America, they're like, but yeah, no, it's going well. Got my jab yesterday. Arm's a little bit sore,
nice.
But no other symptoms, which is great. Definitely encourage you guys, if you haven't done so already, to get your vaccines. Especially, I feel like a lot of our viewers are kind of in their 20s, and we can now all book in and get our vaccines. Might have to go on a bit of a wait list, but it's better to just get it booked in at least and go and get it. So I guess I've got my follow up in 3 weeks, is it, for Pfizer? I don't know.
Yeah.
Just go when they send me the text message, I guess.
Yeah, I think it's like 3 to 6 weeks or something. I think you can go 3 weeks now. That's when I've got mine booked in. So
right, okay.
Yeah.
Yeah, nice. But anyway, turning to the podcast today, Evergrande, that situation continues to unfold over in China. Things are they're heating up. I'll say it that way. They're heating up for sure. Got interesting stories about inflation, as always. There's always something to talk about with flipping inflation. It just doesn't stop. We got Ray Dalio on CNBC. What's this story? US on the brink of first ever default?
Yes.
That'll be interesting. I haven't heard about that.
Yeah, I mean, I just heard about this last night. Actually, it's I mean, there's some confusing things going on at the moment, right? With US debt. So yeah, I'll talk about that a little bit later.
Right. Okay. And I guess with that said, we should probably jump into it, right?
Yeah, for sure. Today's episode is sponsored by Sharesight, which is an application. Shocker. Which is an application that you can use to track the performance of your stock portfolio. So you can bring in all of your trades either automatically by connecting your broker or manually through Excel or just manually entering them in. And it will track all of your gains. So capital gains, dividends. If you have dividend reinvestment plans, it will do all of those calculations for you. Currency gains, if you're buying shares internationally or you hold foreign currencies. And then
fitness gains.
What's that?
Fitness gains as well. Does it track fitness gains?
No, it doesn't track fitness gains, unfortunately.
Oh, damn it.
Yeah,
I think I was going to sign up, but man, now I'm reconsidering.
Yeah, I think that's coming in the next update. So just
okay,
hold on there.
Yeah, when we start hitting the gym again, man, I want to be able to track it with Sharesight.
Yeah, when we start hitting the gym in 2023. So
yeah,
I've got some time to introduce that update. No, but you can also use it for tracking tax. So when it comes to tax time, you can track your capital gains, you can track your dividend income and more. And they actually have up to 12 now different reports that you can use to track performance as well as do your tax. And at the moment, you can try Sharesight for free by heading over to sharesight.com/young investors. That's site spelled SIGHT, sharesight.com/young investors. So use that link, sign up to a free plan, track up to 10 holdings for as long as you want. But you can also use that link to sign up to a paid plan for more premium features and get 4 months off a yearly subscription if you use our link, sharesight.com/young investors. And thank you to everyone who has used that link when signing up to Sharesight and is supporting the podcast.
Alrighty, let's get stuck into it, eh?
Yeah.
Where are we going to start? We're going to start with this Evergrande update?
I think we should, considering last week's episode was almost entirely Evergrande. I think we should start by giving a brief kind of follow-up on what the situation is. Yeah.
I think when we did last week's podcast, it would have been, it was on Thursday morning. So it was on the day that they had those two big bond coupon payments due.
Yeah.
And so the outcome of that was that they missed the $83.5 million interest payment on the overseas bond, although they did strike an agreement with domestic investors over the local $35.9 million payment that they had to make. So that $83.5 million coupon is now set in motion a 30-day ticking time bomb, essentially. So they got 30 days to come up with that money, or that they are in default. They also had one interest payment due yesterday worth $47.5 million. And at this point, it seems as though they didn't pay that. I was looking around, and it's very hard to get information out of this company, but Reuters noted that at least some of China Evergrande's offshore bondholders had not received a due coupon payment by the close of Asia business on Wednesday. And then if this is the case, then that bond now has it's now its own 30-day ticking time bomb. So yeah, things are really going at Evergrande. They need to find some money, and they need to find it quickly. In other news, in other Evergrande news, they also announced that they've sold their 20% stake in Shenzhen Bank to a state-owned asset management company for $1.5 billion. Now, you would hear that and say, oh, great, $1.5 billion of cash. That's beautiful. That's going to help them pay their bonds and whatnot. However, under the agreement announced to the Hong Kong Stock Exchange, the proceeds of the sale will be used to pay money that Evergrande owes to Shenzhen Bank, which is one of the main lenders to the heavily indebted firm, this article notes. So that's a bit of a bummer. Imagine reading the first line of that and saying, oh, they've just sold a 20% stake, their 20% stake in this bank. They've just raised they've found $1.5 billion in cash. This is great. I'm going to get my bond payments. And then, actually, the deal is that all that money goes back to the bank to cover the debts that it owes.
Actually, we owe a bunch of money to that bank. Which,
damn it.
That's it's crazy. So that's a state-owned asset management company that they've sold that stake to. So the state stepping in there a little bit taking a bit more control of some of Evergrande's assets to kind of relieve a bit of pressure, I guess.
Yeah, exactly right. And that they have, I was reading that, actually it's coming up, so I'll just read this. The article notes, this suggests Evergrande will not be able to use the money raised by the sale for other purposes, including the interest payment for the overseas bond on Wednesday. Yep, so we just talked about that. The latest move comes after reports that Beijing has been encouraging state-owned firms and government-backed property developers to buy assets from Evergrande to help it raise the money needed to meet its obligations.
Right.
That's good. They also came out, the Chinese government, they came out and they said that they are not going to leave behind the property investors that might get screwed over by Evergrande's collapse. So, I mean, that's good. That's the thing that kind of worried me, is the poor people that had put their deposits down, and then if the Chinese government doesn't step in and save this this developer, then all those people are going to lose their deposits. But I don't know. They didn't really announce any sort of action plan. They just said, we're going to help you out. So it's like, all right, hope that comes to fruition. But yeah, who knows?
Yeah. I mean, we've kind of seen a couple of small actions, it seems, from the government kind of easing some of the pressure.
Injecting some cash,
Yeah, buying some parts of their business. But, maybe we'll see more of this as those 30-day grace periods, the ticking time bombs that are currently running, as those, get closer to being over, and the company actually getting to the point where they may default. Maybe we'll see a little bit more of that. But some of the actions so far seem to suggest that at least some parts of Evergrande's business is going to get relief. So I guess we'll kind of just have to see how it plays out. But it looks like the government's intending on bailing them out, at least to some extent, in some areas.
I don't actually think they will bail out, Evergrande. But yeah, I think they will try and, it's hard. I don't actually think they'll bail them out, but I think they will try and offer them some support, which kind of doesn't make sense, conflicting statement. But yeah, they're kind of doing some things to kind of to give them a chance. But I feel like if they're really going down, then the government will just be like, all right, we're gonna let this thing collapse. But they've put in those pillars to kind of make sure that, for example, they're encouraging other real estate developments to take on Evergrande's unfinished projects so that those projects actually might get completed, so that, those people that have put down the deposits might actually move into their apartments. But yeah, it's interesting that you're right. They definitely are kind of doing little things here and there to try and offer a little bit of support. But I feel like if it's going down, then they're going to let it fold. But they just want to try and protect the people that might get affected in the kind of ripple effects. That's kind of my understanding anyway.
Yeah, right.
Cool. It's interesting. So overall, they've missed 2 payments now, which is not great. They've also got another $149 million due on October 11th across 3 different bonds. And I should say as well, I just wanted to finish off by saying it is worth noting that it's not completely unexpected that they didn't make these payments, because if you think about a company that's got a cash problem and the bonds covenants say that you've got 30 days. If you don't make this payment, then you've got another 30 days, and you've got all these upcoming payments and suppliers and workers and this and that. You really need to focus on cash management. It kind of makes sense for you to just hold on to your money, so that you can manage the cash levels as best as possible, to try and ensure you don't go bankrupt. So it kind of makes sense that, we should have made that payment, but technically we've got 30 days, so I might just hold on to the money just to see how things start to play out over the next 30 days. Because who knows, the government might do something in the next 30 days which helps them or doesn't help them, which might change how they need to deploy their cash and blah, blah, blah. So it's not entirely unexpected that they did miss those couple payments. But yeah, right. It's certainly a sticky situation.
All right, so October 11, that's kind of the next big event for this company. Yeah,
October 11, they've got 3 bonds with coupon payments coming due, $149 million. It's pretty rough.
Oh boy, yeah. Well, I guess we'll just have to wait and see.
We'll just have to wait and see. Hamish Hodder, you are correct.
I want to talk about this US debt thing, because the headline that I saw this morning, I saw this last night as well, but I saw a different article this morning. The headline was US on the brink of first ever US default. And I was
how?
And I was just so confused. I was just thinking, what is going on? What have I missed that's happening?
Yeah,
because I mean, for the longest time, and I mean, this is still true today, but forever people have spoken about the US government and bonds that you can buy from the government treasury bonds as being, risk-free, that the US can't default, or that, even if they technically can default, it's extremely, extremely unlikely that they would fail to meet their payments on those bonds, and therefore they are risk-free, and that you can use that as a risk-free benchmark. But some of that may be in contention today. Probably not, but at least it makes a good headline, right? So let me talk a little bit about what's going on. So this week, the democratically led House of Representatives passed a bill to suspend the US debt ceiling. So they're trying to get the debt ceiling increased, essentially. So the debt ceiling, for those who are unaware, is a limit on how much US debt the US government can have at any given time, right? So it's just a piece of legislation that says the US can't hold more debt than this amount. It was actually introduced in 1917, and the reason why was so that you could give, they would give power to the House and the Senate, which is of course elected by the people, to have a little bit of power over how much spending and how much borrowing could be done by the government. Just a little check to keep the government in check, so that they don't have unlimited power to take on as much debt as possible.
Right.
Although that doesn't necessarily mean that they can't increase the debt ceiling. It's something they've done over 70 times in the past. So even though the debt ceiling is this limit, it's on a consistent basis increased. So
they can just raise it. Oh, that seems like a silly rule. You can't go over this amount. Oh, but you can change the rule if you want.
Yeah, but can we increase it this year? Can we increase it the next year?
Yeah. Absolutely under no circumstances can you do this, but you can change that rule if you would like to.
Yeah. So, I mean, essentially, from that, it kind of seems like it's pointless. But one aspect of it is, of course, that if the debt ceiling does need to be raised, the House and Senate both need to pass the bill so that it can become legislation. So it needs to go through the House of Representatives and it needs to go through the Senate. And that's kind of where we get into what's happening at the moment. So currently, the US government sits on approximately $28.43 trillion of debt. Hold on to your hats. It's a lot. That's
a big. Yeah, it's a lot of dollars.
That would make you sweat if that was.
When you see that show up in your Robinhood account.
Yeah, exactly. When you've been selling naked call options or something. But yeah, so they're currently at $28.4 trillion in debt. The debt ceiling is actually currently set at 28.4. So technically they went above the debt ceiling already this year. They went above it in August. And since then, they've actually just been using cash balances for their spending. So they actually can't take on any more debt as it is currently right now. And they've exceeded that for about a month and a little bit. And they've just been running on cash that they have around, I guess. And however, that cash balance is expected to run out somewhere between October and November. So even though they've already passed the ceiling, the true kind of breaking point is going to occur somewhere between October to November. So that's kind of the situation we're in right now. And as I mentioned, because they have to get it through both houses of Congress, sometimes the need to increase the debt ceiling gets kind of caught up in politics, as you would, as with a lot of things, right? It can be used as kind of as leverage for one party to kind of get something they want from the other party. So currently, at the moment, the House of Reps is controlled by the Democrats. So that was why they were able to easily pass their suspension of the debt ceiling earlier this week. So they did that easily. However, the Senate is controlled by Republicans. So in order for the debt ceiling increase or suspension to be made law, it also needs to pass through the Senate with 2/3 majority, I believe, as well. They need a significant amount of votes from Republicans, and they're using it currently as leverage to get some of their legislation or to get some things that they want through Congress. So yeah, who knew that could... I
had no idea.
Yeah.
I did not know that there was a debt ceiling. I wonder if that's common. Man, that's just like a gap in my knowledge. I just didn't know that existed.
Yeah, I mean, I knew the debt ceiling existed. I just had never kind of looked into it to any extent as to whether we were close to it or anything like that. The last time this kind of thing happened was, I think, in 2011, while Obama was and the Democrats were in power. A similar thing happen. There was kind of a standstill. So we can talk about kind of what happens if Republicans just keep preventing the increase. Well, the headline thing that could happen is, of course, the US could default on some of its payments for Treasury bonds, and this would be the first time in US history that this has ever happened. So this would be crazy. This would be
so much for the risk-free rate.
Yeah, exactly right. It would. A lot of people believe that it would destroy the global markets and send them into chaos if this happened, because so many people rely on the US government and the US US Treasury bills as being this risk-free anchor in a market, in markets that are full of risky investments, right? Something that everything can be benchmarked against, and kind of a safe haven where you know if you lend money to the US government, if you buy Treasury bonds, even if it's only a 1% return, you know that return is coming in because they will pay it. So that would be kind of crazy if that happened. What would also happen is that the government would have to immediately start cutting their spending to get their spending back in line or even below tax revenue. So, of course, the reason why governments need to take on debt is because they spend more money than the tax revenue they generate. And the US has done this on a consistent basis forever. So they would have to get that back in line. And that would actually mean cutting around $2.57 trillion of spending, which is insane, right? They would have to find a lot of areas to cut. I think the most significant expenditure in most countries is healthcare. So that's probably where a lot of cuts will come from.
Jeez.
So yeah, it would be significant, right? If that happened. Now, the big caveat to this is that likely to happen? Is it likely that the US government defaults on their debt for the first time? And the answer is probably not. What's probably going to happen here is that the Democrats, which are trying to get through this $3.5 trillion spending package, they'll most likely agree with Republicans on reducing the size of that. So this has been a kind of a massive back and forth at the moment. Is Democrats and Biden want to push through this huge bill for spending on infrastructure and a bunch of other things, and the Republicans don't want to do it. So Republicans are going to use this debt ceiling thing as a bit of leverage and get them to back down on some of their spending, or they will default. So we'll see. One of the two things will happen later this month. But yeah, it's kind of, I mean, I don't know. It's a shocking headline, but I think it's probably, I think more than likely it's something that gets resolved. And I mean, if it wasn't something that was likely to get resolved, I think the markets would already be kind of in shambles, because people make decisions based on, what they think will happen, not what happens, not when it happens, right? So, kind of looks like at this point that nothing too much to worry about. It makes a nice headline. Probably makes a nice YouTube video, nice clickbaity YouTube video, but
yeah, no, that sounds exactly right. It sounds just like a headline. But what you've outlined there seems like that there is no real realistic probability that this would actually happen, because you're right. If they can just cut upcoming spending plans or whatever to cover it, then they would just do that, right? It's a very simple solution, I feel. But
I mean, guess we'll kind of just. I mean, we've spent a lot of time talking about debt over the past couple of weeks. We spent almost the entire episode last week talking about Evergrande. This week we spoke about Evergrande. We've spoken about US debt. Man, we need to get off. We need to stop talking about debt.
I would quite like it if there was some more interesting news topics that were not about flipping debt this, debt that.
Yeah.
All right. Well, I'll tell you a more interesting story then. How about we'll talk about Richard Branson? He started a new company. You want to talk about that?
Oh, what's he starting? Yeah.
Well, it says here, from Virgin Atlantic in the skies to Virgin Galactic in space, Richard Branson has now set his sights on the high seas.
Oh.
The business tycoon who started Virgin Group, the company behind dozens of Virgin-branded ventures, is now looking to disrupt the $100 billion cruise line industry at a time when the major established operators are still figuring out how to manage COVID. Virgin Voyages Ventures, the first cruise line to launch since Azamara in 2009, began service this past summer in the UK. It had been due to launch last year in the US until the pandemic hit. Virgin Voyage's first US sailing from Miami is set for October the 6th, which is pretty interesting. I wonder if this is just Branson being opportunistic and just seeing the absolute carnage in the cruise line industry, and then maybe saying, you know what, if we come in with a product that, you know, say we've got the money to do it, right? From all our other Virgin Ventures, can we get into that space, create a new product, and capture quite a lot of market share at a time where the, you know, traditional three businesses that occupy most of the market are really, really struggling. Yeah. So maybe it's a kind of opportunistic venture. I don't know.
Yeah. Well, I mean, we've spoken, I think, a little bit about kind of these really capital intensive businesses, and cruise lines is certainly one of them, and how they are extremely cyclical because of how slow moving they are. And I mean, in the cruise line industry, I mean, it can take years for them to build these cruise ships sometimes. Like if they put in an order for a cruise ship, a lot of the time it's a year, maybe even a little bit longer before that cruise ship has actually been built. So you would have had a lot of companies, especially the big three, that had massive orders in for big cruise ships prior to the pandemic. And then there was a massive drop off. So all of a sudden you have this oversupply of cruise ships that are either made but also cruise ships that are in the process of being made. And that, of course, that oversupply of cruise ships creates an opportunity for a new company to come in and be able to buy into the industry essentially at a low cost, to be able to buy excess cruise ships from companies, but also to buy, you know, half-made cruise ships as well. So it is kind of an interesting situation. I mean, I don't. He seems to love capital-intensive industries. He doesn't shy away from industries that require huge amounts of money to set up. But maybe, you know, I mean, that has its benefits as well. It comes with some cost advantages, some barrier to entry advantages. So, yeah.
And I honestly, what you were just saying before, I think you absolutely hit the nail on the head, because what is interesting about this new cruise company is that Branson said he effectively wants the branding, the marketing to be very much pushed towards, you know, younger adults. He was saying, I think the average age of a cruiser is 49 or something like that.
That makes sense.
So, and what you say could be exactly what Richard Branson is thinking, because this cruise company, Virgin Voyages, has 3 ships, and to try and appeal to the younger kind of audience, they are only investing in brand new, straight, you know, state-of-the-art, straight off the line ships. So maybe you're right. Maybe it's opportunistic, and maybe they got some sort of good deal as, you know, potentially the big 3 pulled out of purchases of big new ships. So maybe he's just gone in there, hey, we can start something up, you know, we'll pay. You want to move this ship at, you know, 50% off? Yeah, sure. Like, give it to us. We'll give it a go. Which is, obviously very interesting. Branson said, it was interesting. Branson said the fact that he had never enjoyed cruising is actually what motivated him to start Virgin Voyages. Do you know, I was never interested in going on cruise ships, and I suspect there's something like 90% of people that are listening who are not that interested in going on cruise ships, he told CNBC. That's the reason I started a lot of my businesses over the last 50 years, which kind of makes sense. You know, clearly if you don't want to do something, there's a reason behind it. There's something to do. I guess that's why, you know, I don't want to go on the airplane. Oh, why don't you want to go on a flight? Oh, because the process is long and slow, and the service is horrible, and the food is terrible, and blah, blah, blah. So Branson starts, you know, Virgin Airlines, gets in there and does things differently, and he's incredibly successful. So I actually kind of admire that way of going about business. You know, think about the things that you hate doing and why you hate doing it, and then just start a business in that area where you eliminate the things that you hate about it.
Yeah, that is kind of interesting. And I'm sure there probably is some room to create something for young adults, particularly when a lot of cruises are targeted at you know, the current demographic, which is kind of the older demographic. But yeah, there could certainly be some room there. I've been on a couple of cruises. Have you ever been on a cruise?
Yeah, I've been on, I think, two cruises before, just on Royal Caribbean boats. But I think the thing with this Virgin Voyages, he's saying he wants to try and do something different. He wants it to be really, fun and for the young person. Like he's saying, we're going to have tattoo artists on board. We're going to have late night cabarets. We're going to have, cocktail bars and record players, bikes and yoga. And they say putting a boxing ring on the top deck. But it's just like when I read that, I said, yeah, sure, that they kind of stand out. And if someone's never gone on a cruise before, they're like, oh my God, that sounds amazing. So cool. But I feel like a lot of the cruise companies already are trying to put in a lot of these kind of weird novelty draw cards. I mean, like the last boat I went on, I think it had ice skating, and then the one above has dodgem cars and water slides and basketball courts. So it's just like, yeah, I don't know. I feel like he's saying, yeah, we want to do something that's better, but the things he listed is kind of like those weird novelty things that are kind of already exist on on the typical massive monster cruise ship. I don't know.
Yeah, you're probably right. I think probably the no kids allowed is probably
that is going to be a big draw card for a lot of people. I feel.
I feel like yes, but surely there are cruises like that already exist.
Yeah,
and
true.
I mean, obviously it means you're going after a very specific target market then, just young adults, not families or anything like that. I don't know. I hope I don't put anyone off a cruise because they are fun, but both times I've been on a cruise, I've gotten sick, and that's my biggest kind of annoyance with these cruises. And I don't know if there's a way to fix it, is that if somebody gets sick on the boat, it goes around and so many people get sick. I mean, we saw it with, even just like relating it to COVID with how many cruises it just spread like wildfire on those cruises before they were shut down. That's my like thing that puts me off cruises, is that both times I've been quite sick by the end of it.
Damn,
that's just my personal experience. Obviously, that's not the experience of the majority of people. So
I think that's definitely the biggest risk, though. Like the last time, I'm lucky that I have not been sick on a boat, but not from motion sickness or anything, but from like food or illness, sickness spreading through but right before we went on our first cruise, there was an outbreak of gastro on the last cruise on the boat that we went on.
Puts you off.
And apparently like a very high percentage of people on that boat got gastro. So that obviously it's a hard thing to mitigate. It's an inherent risk because it's an intrinsic risk characteristic, isn't it? Because you can't help but have a couple of thousand people in very close proximity. You can't. It's not like all right, spread out. You guys go behind the boat. You guys go to the left. Jump into the ocean there for a bit.
And everyone's using the same facilities. Everyone's eating probably at the same places, the same like buffet
same food.
Yeah, so it's that's my thing. But I mean, they've both been good experiences. I got sick only at the end of them, and obviously I know that most people don't get sick on them. So my like perspective is jaded by my unluckiness. So there's that. But yeah, very very interesting. I mean, it's tough industry. I mean, these kind of industries, same with like the RV industry and the airline industry, they're so consolidated because when we go through these big recessions like last year or even 2008, most of the little guys they just can't handle the payments. Their revenue drops off. They have all these expenses and they have all these upcoming payments for boats that they were expecting to order, and they just go out of business. And then the bigger companies just acquire them and just like suck them in, and it becomes this consolidated industry with like 1, 2, 3, 4 players. So maybe he'll be able to compete because he's got a lot of money and he can kind of maybe he can survive through a recession. But that's kind of the typical life cycle of newer companies: is you either go bust or you get acquired.
Yeah, and I was just thinking whether I actually give this a shot. Like, do you reckon that this could actually take on? And honestly, like, I like Richard Branson. I think he's kind of a cool guy, and I admire the way he kind of goes about business and tries to, solve problems. But in all honesty, I just don't know how he's going to, get this company how this company is going to stand apart from the rest of them.
Yeah.
I mean, I just feel like all of the like I said before, all the draw cards he's kind of saying, I was going to be young and hip and it's going to have quirky kind of things. I feel like all the other cruise companies do it already. I just really don't know. Maybe it does work out with their brand new ships and their brand new experiences. And if the marketing goes well, maybe it does become its own thing. But I just feel like, maybe there might be a novelty factor. Oh, we're going to go on the new Virgin cruise line. Oh, yeah, I've been going Royal Caribbean and Carnival, but Virgin. Oh, I'm different. Look at me, individual here. I'm going on Virgin. But I feel like that might, even if there's an effect there, that might last for maybe 1 or 2 years, and then it's just going to be, it's kind of like Virgin Airlines now. It's just like, oh, would you rather fly Virgin or Qantas? It's like, I don't know. It's just they're both airlines, right? I just feel like it's going to start blending in. It's like, oh, you want to go Virgin or Carnival? And it'd be like, I don't know. They're both the same, aren't they? I guess Carnival, because I hear it more often and they're bigger. They've got more boats. Yeah, I don't know.
So, I guess. So is this has he started this company and just recently,
Yeah, I think the reason it's making news now is because they're about to start their first season in the US.
Okay. So it's been kind of going for a little while, right?
I think that they've had one UK season now,
right.
But I'm not sure if they got much done because of COVID, obviously. But
that's the other thing. Like, how long before people are comfortable doing something like that again? I don't know. Do people just revert back?
I feel like if you're vaccinated, I feel like once people are vaccinated, they'll feel pretty good.
Yeah. I think that's probably true.
But you're right. It's a question mark for sure.
Yeah, that's something I wonder about with a lot of industries that have kind of been shut down, like restaurants, for example, or going out to theaters and that sort of thing. I think that people kind of revert back quite quickly, but it's yet to be seen. We kind of have to still see that, I guess, how quickly people go back to normal, or whether things kind of stay a little bit strange still. Do people still wear masks when they're sick? Is that something that stays? Or does that
will be interesting, won't it?
Yeah, I don't know. My bet would be no. I mean, like if you're looking 5 years out, my bet is that no, we just go back to how we always were. But maybe I'm wrong. Really. Maybe I'm wrong. I just think human habits like that we've built for however long we've been alive are much stronger than the change in behavior from the last 12 months. But
I tend to agree.
That's just my opinion.
Yep. Jeez, you're so opinionated, aren't you?
Sorry. I need to be more objective. need to go back to the monotone news reading.
Oh God, no! I'd hate that. Imagine if this podcast was just like we didn't even discuss the news. It was just like I just read this news story, and then you're like, okay, cool, and then you just read another news story. Okay, cool. Back to me again. I read another. That would just be in my eyes. That would be the most boring thing ever.
Nah, that would be awful. No,
enough about Richard Branson. Good luck. I hope Virgin Voyages. That's right. I hope it takes off. I'll have to give it a try at some point. We'll have to go on a cruise. We'll go on one of when the boats come to Australia. We'll go on a Virgin Voyages cruise. We'll do
like a 7-day
tax deductible.
Yeah, we'll do a 7-day podcast. We'll just every day.
Yeah,
we'll be recording.
Yeah. Tax deductible, of course.
Yeah.
All right, let's move on. What do you want to talk about next?
I've got a very quick one on inflation. I know we've talked about inflation and the debt and all of these things that are boring for a lot of people. So I'll be very, very quick on this one. But there is a little bit of an update around what the Fed chair, Jerome Powell, has said on inflation. This week, he called it frustrating, which is an interesting way to describe it, and sees it running into next year. So he still expects inflation. He still expects inflation to ease eventually. Well, that's good that he expects it to ease eventually. But Wednesday, he said that he sees the current pressures running into 2022. And what he said specifically was, it's also frustrating to see the bottlenecks and supply chain problems not getting any better. In fact, at the margins, apparently getting a little worse, he added. We see that continuing into next year probably, and holding up inflation longer than we had thought. Shocker. They also raised their projection for 2021 core inflation from 3%, which they projected in June, to 3.7%. And both of those are much higher than the projection that was made in March, which was 2.4%. So obviously, we give Jerome Powell a round of applause for his projections just 3 months into the future that were wrong.
Oh dear, that's so funny, isn't it?
He actually stood up today and apologized for being so wrong, and he's not going to make any more projections about inflation into the next year. So that's he didn't do that. He of course continued to project, but I mean, if you get it wrong every quarter, like what's even the point of projecting? I mean, at least business guidance, when people guide forward for like quarterly earnings, for example, at least most of the time it's like in the ballpark, and only if there's a serious problem that comes along that they're way off. But I mean, this guy can't even get it right 3 quarters in a row.
Yeah. And that's if you, just going on with your example, if you turn to a lot of the companies around about now where they honestly just can't predict how their business is going to go, then instead of trying, they've said, look, honestly, we can't predict this stuff because it's really hard. And they just have said, look, we hope to do this, but honestly, we cannot be clear on what our guidance is because we don't know. So why doesn't the Fed just do the same? Maybe because fear, panic. Maybe if they can just because I mean, projections, maybe some people just take them at face value. So maybe if the Fed says, oh, look, Jerome Powell said he's only projecting 2.4%, great. I'll trust that 100% and I won't get nervous about inflation. Maybe that's just the reason that they continue to project, is because they just want people to hear a number and just go, oh, okay, 3%. Because we know that so much of inflation is the whole psychological thing. Like, if you expect inflation, then inflation will likely continue. So maybe it's just like, oh, okay, I'm reassured now. Inflation isn't going to continue that bad, but now, he's obviously copping it because the numbers are conflicting with
reality,
with the predictions. With the predictions that he gave and the reality that we're seeing. So but no, it is interesting to see him finally kind of come around and say, look, we do expect it to persist, because I mean, it's just been so long now. It's just been, no, it's not going to keep going. No, of course not. No, hey, no. And now it's like, oh, yeah.
He went on to say the current inflation spike is really a consequence of supply constraints meeting very strong demand, and that is all associated with reopening the economy, which is a process that will have a beginning, a middle, and an end. He then says, we see those things resolving, but it's difficult to say how big those effects will be in the meantime or how long they will last.
Yeah. And in all honesty, that is true. That what he said there is true, is that a lot of the inflation that we see is because, as he notes, that the supply chain issues really right now, and I actually got a lot of comments on a video I made recently about how the supply chain's in a bit of, in a lot of industries in a bit of a pickle. And they were saying there were people that actually work in, the supply chain logistics in various industries saying that actually, they're seeing the worst it's been right now. Like a few months ago, it was easier than what it is now. A few months before, it was easier again. It's actually ramping up and is most difficult now to sort out. So I feel like that's interesting. I'm obviously no expert, but I just thought that kind of anecdotal evidence was kind of interesting, that it definitely fits with what's being said.
Yeah, and I mean that makes perfect sense, right? Because of course you would expect that as we get further and further away from the worst parts of the pandemic, that businesses will have time to fix their supply chains. But what's also happening during that process and over the course of this year is demand has progressively increased, because more and more of the global economy is reopening and progressively reopening. People are spending more money and getting back into the jobs that they might have lost, or maybe they're starting to transition back into jobs that they were working previously away from other jobs. So that's the demand side, right? That there's this huge push of demand that certainly there's a spike effect that happens right after the pandemic as people just want to go out. But then there's the kind of the long push that I think will probably last a little bit longer of just overall demand push. And yeah, it's interesting to hear that that's actually making supply chains worse, even though there's been a considerable number of months now for them to kind of fix those problems and meet demand. They can't really keep up with that at the moment. So yeah, it's a little update around, inflation, pretty much the same thing as what we've been saying or what's been happening with inflation for the whole year, which is that Jerome Powell says it's mostly transitory. It's been higher than he expects, but continues to think it will be mostly transitory, and that, he's pushing it out to like late next year. We will see inflation kind of coming back now, whereas it was expected to be late this year. So they're kind of moving the goalposts a little bit, but maybe he's right this time. Maybe he'll get it right. He'll get it right eventually, right? He has to.
Yeah. Wasn't that our strategy? Didn't we say that ages ago? We'd just make like, at the start of the year, we'd make like 15 different audio clips of different predictions, and then we'd just take the one that we got right.
Yeah.
Splice it in. Remember back in January when you said that inflation was going to be at 5.4%? Wow. You are just
Yeah, I got to go scour through the episodes and see where I said that inflation was going to be higher.
We really should keep a better tab of what was said in each episode, because we always say like, oh, we should go back to that episode, but we can't remember which episode we talk about these things. Like we've got the basic, because we can look at the title and we title them based on the main things we talk about, but even the little anecdotal things, I just can't for the life of me remember when we said the things that we said.
No, not at all.
Anyway, one more thing, actually, before we get into Q&A. Did you see this? This is something that's more relevant to us as YouTubers, which I actually applaud. So we've seen, Facebook, for example, social media platform, they're very much of the opinion that they're just the platform. We're not gonna step in and moderate or, regulate these things. We're just the platform. Whereas YouTube, interestingly, is taking a much different approach. They're cracking down on their community guidelines. It says here, YouTube bans high-profile anti-vaccine accounts, saying that it will block all vaccine misinformation, which honestly I am a fan of. Obviously, there's going to be people on both sides who are just like, people entitled to their own opinions, and it's up to the individual to decipher what is real and what is not, and what is good information and what is not. But in all honesty, I have to say, when it comes to something like these vaccines, these COVID vaccines, I hate seeing vaccine misinformation. It really annoys me that people are, deliberately, whether it's, for financial interests or political interests, they're trying to spread misinformation about something like a vaccine. It really bothers me.
Yeah. I mean, there's some clearly, there's certain things, when we're talking about vaccines here, right, there's like a whole array of things. There's some things that are, we know for a fact, and misinformation on those things is kind of just, I think that should definitely be looked into, because it makes people, keeps people misinformed and they make wrong decisions. And then there's areas that, there's room for debate. And I think as long as we can make a distinction and try and make a distinction between those two things, then we're okay. But yeah, I agree with you. It's, whenever something like this happens, there's always a lot of different opinions, and there'll be very far-reaching opinions that are obviously based on very, very wrong information.
Yeah, it's a very wide spectrum. Yeah.
So what happened?
But it is what happens. It says Google-owned YouTube banned prominent anti-vaccine accounts in an effort to strengthen its policies on misinformation around vaccines, the company said in a blog post on Wednesday. It will also ban misinformation on all vaccines that are confirmed to be safe by the World Health Organization and local health authorities. Social media companies have said since the beginning of the pandemic that they're trying to stop the spread of coronavirus misinformation, but falsehoods have continued to run rampant as companies struggle to police the constant flood of posts and uploads on their platforms. As part of the crackdown, a YouTube spokesperson confirmed it removed pages associated with high-profile misinformation spreaders like Joseph Mersola, Erin Elizabeth, Sherry Tenpenny, and the Children's Health Defense Fund, which is associated with Robert F. Kennedy Jr.
Yeah.
So there you go.
Yeah, well, I mean, YouTube earlier it was a couple of months ago, I think, gave Sky News in Australia I think a 30-day posting ban or a 7-day posting ban for...
Good. I hate their videos. Oh my gosh.
Yeah, it's so I mean, yeah, these YouTube crackdowns have been look, here's my opinion on it. I think if there's certain things that we know are a fact and it's not debatable, if people are spreading misinformation about those things, I think that, I think all power to YouTube to ban those things. I think the concern is when there's things that are evolving, and, things are not set in stone, then I worry about kind of censorship from that perspective. That's just my perspective. And my overall view is these sites should lean, although they have the power to do whatever they want. It's their site. I think they can do whatever they want. I think they should lean on the side of allowing free debate, even if there's things that you think are wrong. But that's not the case for, there's some things that are just factually incorrect and misleading and dangerous, especially when it's around public health. So that's the exception to that.
And that's why, I was cheering when Trump was banned from the different social media sites last year because he was inciting violence and people to storm the Capitol. So like those things where it's actually like, wow, okay, this is gonna be a big problem if we don't intervene. Then I feel like, go for it, intervene. Like if people are gaining traction on YouTube spreading misinformation about coronavirus, it's like, this is gonna be a big problem. We need to stop this. Then go ahead. But I agree with you. If there's things that are up for debate, where it's more political, I don't think that, these companies should take a political side and, advance left kind of views and block right or vice versa. That sort of thing. That should just be, those sort of matters should just be left up to the individual. But definitely vaccine misinformation. Far out. Block that. Block that.
Yeah.
Yuck. Disgusting.
Yeah, I'll be honest, I actually haven't seen too much, and maybe that's because I haven't done that much like research into vaccines on YouTube, I guess. But I mean, I'm sure there's a lot out there. So good that they're cracking down, but not something I've personally seen actually. So yeah.
Super interesting, these vaccines. It's really interesting. They work on this microchip technology. Like they inject it into your arm and then there's these microchips that flow around your body and they zap the coronavirus part. It's really interesting, man. And apparently Bill Gates is behind it. Did you hear that? Bill Gates is behind all this. It's really crazy.
Yeah, you were talking about how your arm was a little bit sore after the vaccine. Mine was too, but I also, my 5G went from 3 bars to 5. So
exactly.
Like that's a perk that hasn't gone away.
I can shoot lasers out of my eyes now as well, which is pretty
Every
cool.
Time I touch something, I get a zap. I don't know, like is that not?
What does that mean? Oh dear. All right, that's enough of that. Should we do just a couple of questions in Q&A? maybe?
Yeah, let's do it. I'll ask one to you. I'll give you this. I'll hit you with this first one. Hey guys, love the podcast. Thank you. What's your opinion on cinemas as a potential investment opportunity right now? Many of them are saddled with huge debts, and obviously streaming services have taken off massively during COVID. But how much do you see cinemas recovering in the long term?
Yeah. Got to be honest, cinemas is not something that's really smack bang in my circle of competence. I don't think cinemas are going to go away, though. I think cinemas, like obviously it's a company by company basis. If they've got a whole mountain of debt, one company does, and the cinemas are closed and it's looking like a cash crunch, okay, maybe that's not going to work out well. But I think just cinemas in general, I think they're going to always be around because, and I've said this before on the podcast, yes, you can just watch you can watch a movie in your lounge room on a streaming service. And what we've seen is while cinemas have been closed, they've been releasing, new release movies direct to streaming services where you just have to pay a little bit more to actually access it, in its, whatever it would be box office kind of window, as opposed to when it would just be regularly added to a streaming service. So, I can understand, and that's increasing, accessibility of new release titles to people, and people are just going to start watching, movies in their lounge rooms as opposed to going to the movies. But I really just do see going to the cinema as a social event. Like, to be honest, when I go to the cinema, I don't particularly care what I'm watching. It's more the fact that I'm going to see a movie with a group of my friends. I think that maybe, if you're just one of those movie lovers that you go to the movies just to watch a whole bunch of movies, and, you're one of those people that goes to the movies alone without any friends and just sits at the back and just, I'm so interested in this movie, then yeah, maybe you won't be much of a cinema goer anymore because you've got the option to sit at home and watch movies instead. But to me, I just feel like in the long run, cinema thing, it's just like, why do arcades still exist? Why you can just play Xbox, dude. But it's all about, going out with your friends and having a good time and playing a crane machine or something. I just feel like it's more social than actually the movie itself. But I could be wrong. That's just my opinion.
Yeah. We have a little bit of a different opinion on this, I think.
Okay.
Yeah, I agree with you. I don't think cinemas are going away. I think that it's a unique experience that you can't get anywhere. But as I was speaking about before, actually, how I think a lot of, habits that people have, adopted during the pandemic will kind of revert back. At the same time, I think there's certain areas where the pandemic will actually accelerate a change in people's behavior. And one area that I see that is in retail. I think that a lot of people are moving to buy more things online. And I mean, physical retail, I don't think is going to go away, but it's certainly shrinking, and it's certainly giving way to online. And the pandemic was kind of a period where people were forced to buy things online if they wanted to. So a lot of people got introduced to that experience, and I think a lot of people won't go back. And I think may very well be a similar effect that happens with how people consume movies. I think there's probably a lot of people who didn't use streaming services, but that started to use them more regularly. And I think that'll continue to drive people's behavior away from cinemas. I think this is in the US, I think since 1990, there's been a consistent decline in the number of tickets sold for movie cinemas. So it's a long-term trend that's been going down. I don't think cinemas are going away. But
maybe it'll just be more niche.
Yeah, exactly. And look, that doesn't mean, again, that it's even a bad investment, right? There will be physical retailers that are good investments, even though the overall industry is making less revenue. It's just a little bit more difficult, I think, to navigate that. Because you have to take into account, well, if the industry is shrinking, then if the business is going to grow or even just maintain their current revenues, they have to expand and they'll have to capture more market share. And I think you'll see a progressive consolidation in the industry where the cinemas that have remained and have survived will probably start buying up other cinemas and expand that way, rather than them doing something like redesigning their cinemas and seeing some massive organic increase in the number of people going to cinemas. That's just my opinion. So
that makes sense.
That's just what I see. At the moment, I mean, watching box office movies that come out on streaming services, so the ones that they've kind of released and you have to pay an extra amount, it's just ridiculous. I mean, I think you have to pay, for Disney's ones, you pay $30 on top of the subscription, which is just like 4 times the amount that you would go to the cinema. So that's obviously insane. But I think I could imagine a point where movies are just released. Well, I mean, at the moment, a lot of movies are just released on streaming services and don't go into the box office. It's things like through Netflix, go straight onto the streaming service. So I could imagine that being the case. And I mean, the home theater that people have now has just transformed massively since let's say like when TVs were first around, right? When
Yeah.
TVs first came out, you were a rich family if you had 2 little boxy TVs, right? Whereas now, if you're quite wealthy, you might have like a cinema in your house. So like what is classified as like, what's available to people in terms of the cost of home technology and home cinema has improved massively. And I think that's going to continue. I think people will continue to buy bigger TVs, better speakers, better couches, maybe. I don't know.
It gets it closer to that cinema experience. Yeah, you're right.
Yeah.
Yeah, interesting. All right. Did you ask me? Yeah, you did. I'll ask you this question. Where do you guys go to find industry-specific statistics? I've been struggling to find information on the Chinese infant formula market for my research into the A2 Milk Company. It's quite a specific industry, and every research report that I find is priced for professionals. Any tips on where to find this kind of info?
Yeah, that's difficult. I mean, a lot of industry research you'll find will cost. Because that's their business, unfortunately. There's a couple of little tricks that I use. I do have a paid subscription to Statista, and it's not cheap. I think it's might be $500 or $600 Australian dollars a year. So it's not cheap, and it's definitely not for everybody. But that gives you access to a lot of research reports that are behind paywalls.
They do a lot.
So that's really good.
A lot of industries.
A lot of industries. Yeah, exactly right. And they do kind of these reports on a lot of big American companies and other companies outside of America as well, where they basically just consolidate a bunch of different industry data for those companies, and it makes it really, really easy to research them if they're in there. Not every company, but the other thing that I do just for getting free data, a little trick that often works for a lot of companies is a lot of companies themselves will use industry data when kind of selling their company in their investor presentations. So if you go through the PowerPoint presentations that they have on their website, most companies will do these. You should be able to find some industry data in there, and they'll usually source it. So they'll cite where it's from. So that can show you where good industry data is, and then it's just up to whether that data is freely available, whether it's on Statista with a paid subscription or a free one, or whether you just have to pay outright for it, in which case you're probably not going to, because a lot of the time they're insanely expensive. So that's kind of how I go about that. Do you have anything else on that?
Yeah, no, I think you've hit the right points with Statista and looking at industry data that's linked in investor presentations. I would look at multiple companies in the same industry and look at what industry data they cite, and then I would check the reporting methods of how that industry data was compiled, just to make sure, because obviously if you're a company trying to sell your stock to new investors, you're going to probably find, oh, look, this website thinks our total addressable market is this, or this research study thinks that our total addressable market is $85 billion trillion quintillion dollars. So
that's a good point.
Yeah, I mean, but that's how, if you just go around and you get a feel, you have a look at multiple different companies in the same field, and you look at all the different numbers, and then you go in and you have a look at the source, and you actually figure out how they came, or what evidence, how the evidence was gathered, then you'll be fine. You get a good understanding of it. But yeah, you're right. Definitely, they love to chuck in industry specific numbers in investor presentations. They love doing it.
All right.
So yeah, it's a good source.
Very good. Should we wrap it up there for today?
Yeah, let's do it.
Yeah, thanks everyone for tuning in as always. And quick reminder, if you do have more questions that you want to ask, you can by heading over to the YouTube version of the podcast at youtube.com/The Young Investors Podcast. Just leave your questions as a comment on the latest episode. And if you have any feedback for the podcast as well, you can leave it there. We tend to, just before we record the podcast, kind of scroll through and see if there's anything there that we can kind of improve on for you guys. But thanks everyone for tuning in. As always, head over to sharesight.com/young investors to try a Sharesight subscription for free. Thanks, Brandon, for joining me as always.
All good, friend. All good.
And we'll see you guys next week. See you later, guys.
See you later.